IVM.
Folks, welcome to Paisa Vaisa. I'm your host Anupam Gupta, P50 on Twitter, and today's episode we are going to talk about credit for the youth. I know the youth deserves a lot of credit, but we're talking about credit cards, the concept of credit for the youth in specific. My guest, Rajan Bajaj, founder and CEO at Slice. Rajan, welcome to Paisa Vaisa. Thank you so much for doing this for our listeners. Let's start with a brief introduction to yourself. Tell us about yourself and how you came to start Slice. Go for it.
Thanks for having me here, Anupam. I'm from a small city in Rajasthan called Alwar. When I was growing up, my parents encouraged me to play many sports. And actually, I was the first person from my school that represented our state, Rajasthan, in basketball national tournament. We had a great team. We lost in semi-finals. But I had a great schooling, growing up with playing so many sports. I then completed my engineering from IIT Kharagpur. And after graduating, I got an opportunity to work with a great team at Flipkart. I was there for 10, 11 months. Then I moved out to start my own venture. But I learned a lot while working at Flipkart. It was the fastest growing startup in the country at that time, at that scale. And I was in the product team right at the center of creating very innovative products for the largest audience in the world. So there were 3-4 pivots after which after when I started up, and over a period of 1 year we did that, and then Slice happened. It was a combination of what I was facing as a problem as a youngster when I was doing my first startup, where we were trying to build a rental product, and then when it was not working out, we tried various things in the financial services place, and Slice is something that really stick, and we felt that we can build a very large business there.
Fantastic. Let's talk about now the problem that Slice addresses. Okay? Because we said that it is credit cards for the youth, and somewhere the youth aren't really understanding the concept well. So first, I want you to explain to our listener. I'm sure there are a lot of young people out there who are listening to my show. I hope they are. How do you define your target audience? And then tell us the problems that they face in specific. Because I can tell you that even as someone who's not young, there are a lot of problems that I face in the banking space, credit card space, whatnot. But tell us about your specific target audience and the problem that they face. Go for it.
Yeah, I'm sure all of us have faced those problems. That's what you are, I think, also saying. So we operate in a very specific segment. This is the fastest growing segment of our country. These are 18 to 30-year-old millennials and Gen Z who are our future economic wave. This is the audience that takes us to $5 trillion economy that we are chasing. And this is the socio-economic fabric of our country. When these customers grow up, they will have very different ideas of how the world should work, including banking, including how financial institutions should be working. And those customers do not believe in large financial institutions backing them when they are growing up. And there's a lot of reasons for that. You have faced those challenges. I have faced those challenges when going to a bank branch, when talking to a customer service executive. And those are the customers for whom we are solving and building Slice.
Okay, so I wanted to tell our listeners, where are the gaps? Where are the specific gaps between? Because see, here's the thing. Now, all of us at least have a basic bank account. Not all of us have a credit card. So in the current BFSI space, the banking financial services industry, where are the specific gaps that you think that totally miss your target audience? Or to put it simply, what are banks getting completely wrong? Why are they not able to identify this opportunity that's there for everyone? Tell us about that.
Let me tell you about something that happened with me in my college. I wanted to take an education loan. I went to the bank branch, a physical brick and mortar branch. I met the branch manager there who came after 5 minutes. I was waiting on a couch outside. He was very candid with me, and he wanted to understand what I want to do. And we were having a general chat. Now I bring up this topic of education loan. And basically the comments that I got from him and the subordinates that were there, where are your parents? Will they co-sign this document? They did not grasp that the motivation of me coming and asking them for education loan, and they did not try to understand that I did not want my parents to co-sign that document, because I wanted that independence. I wanted to get that loan myself and pay for it myself after I graduate from my own money. But they did not get that, and they lost business from me that day. But moreover, what also happened is that made me believe that these guys don't believe in me. These guys do not understand me. These guys do not believe in my ambition. These guys do not understand my drive. And that is the gap, Anupam. That is what we are solving. We are not just trying to solve a transaction gap which is there, where banks are not doing something and we are, will do something different there from a transaction standpoint for a customer. But is that the large financial institutions do not believe in this young customer. And as a young customer, what you get when you go to their website is, get loan at house loan at 8.5%, get a car loan at 13%, and that is not what I want to hear. I want to know from you, are you going to back me when I grow up? And the answer is no. And when compare that to when a customer comes to Slice for a Slice card, we really embrace the fact that this is an 18 to 30-year-old guy. We see their drive, we see their potential. We do not see, I mean, the main thing, the problem that the banks have is that they see risk as the most important metric for the customer. So when I walk into that bank branch, all they are seeing is risk, and customer service is secondary to them. When our customer comes to us for Slice card, our key metric is customer service, and risk is a supporting function that we have mastered to really solve the end goal of customer service for this customer. And that is why customers come to us. That is why our NPS is above 70, and customers are bringing their friends also to come and use Slides, which doesn't happen to bank branch and which would not happen to that bank manager.
Yeah, that's really amazing. But here's the thing, right? I mean, one, of course, what we said is having to go to a branch. I mean, it's 2020. You've got technology. You've got your phone. Why can't all this happen on an app? Now, here's the thing. So, Rajan, I need to understand one thing. Now, the loans in the banking industry they all center around a concept called credit score. Okay, I've done a few episodes also on the concept of credit score, and that apparently is central. It's important to giving anybody a loan. It could be a credit card, it could be a home loan, could be an auto loan, could be a car loan, could be anything. So I need to, because you specifically mentioned risk, because you said the bank looks at risk before service. Maybe from their perspective, they don't want an NPA or whatever. I'm not. I'm just trying to see it from their side. I want your opinion on this. Like, if you give someone who is a first-time user of credit, whether it's a loan or whether it's a card, what's the risk out there? I mean, in giving a credit card to someone who doesn't even have a credit score, what would be your answer to that?
Yeah, I mean, risk is a very important metric, Anupam. It's one of the most important things, and that's our business. But what I'm saying is that risk is a support function. It's not the primary metric for the customer. Customer doesn't care about your risk. And when you're building a customer facing product, you have to make customer service your primary metric. So when a customer doesn't have a credit score in India, how do they build a credit score? They have to get credit. That's the only way. And for that, someone needs to back them for the first time. Someone needs to believe in them. Someone needs to see their potential. If that doesn't happen, how will anyone make their credit score? Even for banks, they do that. It's not like they don't do that. I mean, they're doing a very good job when it comes to customers above 27, 28, 30. And I think RBI is doing a very good job for making sure that the Indian banks are, the banking system is very competitive. But what gets missed out of this young customer, a 22-year-old guy, 23-year-old guy, where when the customer doesn't have enough things to show you, you can't ask for that customer for their whole life history. Give me your birth certificate, give me your this that, because this customer doesn't have time, and you still need to measure their risk without making them feel like you're asking them for all these data points that they probably are hesitant in sharing, and that is the problem that we are solving.
Very interesting. Any other experiences that you had when you were setting up Slice in terms of people coming up to you with problems? You mentioned your own problem about how when you went to get a loan, first you had to go to a branch and you had to wait, and then the bank manager came and asked you about all kinds of things. Any other any other experiences that you had, maybe from your friends, from your family, from your user base? Because I'm sure that some amount of research would have gone in understanding the use case for Slice. Any other experiences that can help our listeners to probably understand your product better?
Yeah. So what we did is when we were starting up and the previous startup was not working out, we created a simple Shopify page and put some images of e-commerce product on that and said that instead of buying the phone at for 20,000 rupee, you can buy at 3,000 rupee in EMI and pay over 9 months or something like that. And we just started doing digital ads. Within a matter of 3 or 4 days, we got more than 1,000 people coming and signing up and actually clicking on checkout option from us. And that
Hmm.
told us there's a lot of demand in this particular, and we were focused on that particular segment. And that told us that there's a lot of latent demand in this particular segment where people are not having that option of credit, but they want it. And they want it because these are products that will help them in their lives. Some person buying a camera actually from us, and this is a real thing. They actually ended up getting a job at Google eventually for photographer, and they were able to get that because when they were young, they were able to get a camera because of Slice. So that particular pilot or MVP, actually, we did not have anything on the other side. So we did not even start. We did not have an NBFC at that time. We did not have any credit. We just did it as a pilot. We saved the contact information of all these 1,000 customers who came, and then after a couple of months, when we actually started, we reached out to them that, hey, we have started now, and please, you can now come and use our services. But this pilot really told us, what is the need of this customer, and over a period of time, we realized that it's not just the EMI products that customers need, it's also payments. Out of 100 customers, only 10 customers will want to use an EMI product. But 70, 80 customers are doing digital payments and they want a pay later product which is accepted at every place. So that is why last year in 2019 May, we fully launched our physical card, which is a RuPay card accepted at 5 million plus merchants. And that comes with the same pay later line that we have. So now we are suddenly targeting all those 70, 80 customers, and which is a big use case for them because they can pay you for all their transactions in that and pay back next month. And in the process, they end up building their credit history. And like I said, someone needs to make sure that they build their credit history. Someone needs to be the first credit provider to them. Otherwise, they never make their credit history.
Fantastic. Last question on this first half of the episode now, Rajan. Okay, I'm going to take the other side of the debate out here because there are a lot of people. I mean, India, as you know, traditionally was and still to a large extent is not a credit card economy. Users prefer debit card, and as you know, UPI payments have just shot through the roof. Okay, so what would you say, to someone who says that you should not use credit to buy a product? Like say the you have the Amazon sale come out and you've got an iPhone at $60,000. A lot of Indians believe that why should we even first buy that iPhone? But any which way, the entire concept of using a credit card probably fuels behavior which is not exactly desirable. And maybe that's one reason why credit is still underpenetrated. So I'm just talking about habits out here. Credit card versus debit card for purchases. What are your views on that?
Yes, very good question. I think UPI, while it has exploded and become very large, still 60% of the payments, 70% of the payments happen in P2P. So if you look at the transaction volume, credit cards are still right there. The P2M merchant transaction volumes. Credit cards are around $8 billion per month, and UPI and other products are also doing something similar to debit cards. And credit cards just have 30 million customers, unique customers. So the reason a customer today is using a credit card product are multiple. One is that it's like a it's like a free financing for you. You can pay back next month, and in India the interest rates are high, so you can actually park your money in a liquid fund and earn 6%, 6.5% there. Second is you get rewards, of course. And third is for customers who haven't built a credit score. They build a credit score for themselves without doing anything. They just need to pay using this product and pay back next month without any extra cost. They may even get some rewards. And what you end up getting is when you have to take a house loan, you could potentially save lakhs of rupees by just a differential of 0.1% and 0.2% in your interest rate because you have a higher score, and that puts you ahead of your peers. The longer the time period of you being in formal credit ecosystem, that puts you ahead of your peers when you have to take a car loan or a home loan in future. And most of us have to take that. Right? It's the reality, and that is the reason people should start using a product like pay later and credit card from a very young age. They should obviously be very disciplined about it. They should not go about spending more than their means. I think the way to think about it, if you want to buy something aspirational and you don't have the money for it right now, then it makes sense because you have a future cash flow that you can predict. That time you can spend beyond what you have in your bank account and pay it back over the next 12 months. Because if you want that camera today, and with that camera you can land a job at Google 12 months later, you don't want to be in that cycle where you've never been able to buy this camera because you do not have money. So sometimes it's very important to buy beyond what is there in your bank account, especially for young people who do not have a lot in savings. But the other use case is that when you have enough savings, also you park your savings, in your liquid fund or in your bank account, and use it just as a pay later product. Pay back next month on time, build your credit history, and actually end up earning some money also because of rewards and the money that you're saving in your bank account.
Folks, that is a very good, I would say, advocacy for credit card. As usual, remember, good credit habits. We've done a lot of those episodes on Paisa Vaisa also. Number one, read the terms and conditions on your credit card. Number two, never devolve, guys. Never skip a payment. Pay your credit cards in full at the month end. Okay, so just sort your finances. You don't want to keep on revolving your credit card because that shit can get ugly. So don't go anywhere. We will be right back on this episode of Paisa Vaisa. You could call it the Slice Special, the credit card for millennials special. My guest, Rajan Bajaj, founder and CEO at Slice, will be right back.
I want to thank Intel for supporting our show. Do you remember when last year we spoke about how the Intel vPro platform is built for business? Well, I'm glad to say we've kicked things up a notch. That's right, Intel is back with a new and improved version of the platform. Optimized with 10th generation Intel Core processors, the platform is just what IT and business users need, especially in times like now when most of us are working from home. The new Intel vPro platform lets you do more of what you want and less of what you don't. So it's better for you and for your IT teams, who really are the backbone of keeping your work from home experience easy and enjoyable. The platform is built to minimize your efforts and maximize your PC productivity, especially when working from home. I can safely say that the new vPro platform gives you more enterprise efficiency with less constraints. Visit intel.in/more with vPro, that's VPRO, to discover how you can get more done with less waiting. If you're listening on the IVM Podcast Android app, take a look at the screen right now and you'll see a link which will take you directly there.
Welcome back to this episode of Paisa Vaisa. My guest, Rajan Bajaj, founder and CEO at Slice. A seriously interesting product, folks. The website is sliceit.com, SLICEIT.com. And Rajan, go for it. Tell us about Slice. Now you've explained the entire concept, the problems, the gaps that a lot of the young people face. Tell us about Slice. How exactly does it work and how you solve exactly the same problem that the bank cannot? How do you crack the credit score gap in giving a pre-approved card to someone who's using it for the first time? Because you're essentially, you're taking that risk. You're giving great service, okay, going by the technology that you use, app that you've got, but you are taking a risk on your books. So explain to us how you manage these two things.
First of all, let me just clarify, Anupam, I would not say that the banks cannot do it. Banks are doing a fantastic job in India.
Yeah, no. No offense to banks, guys. Don't get banks are doing a great job on a lot of things. I didn't mean that, Rajan. Just saying that there are some gaps out there, and that they are. I'm sure you'll agree. Even the banks will probably agree. Go on.
Absolutely. So we have a very unique niche customer audience. Average age of a customer is 22 and a half. And we provide them a pay later line that comes with a Visa card or a RuPay card. As a young customer, you can come directly to our app, apply, complete your profile basically, which takes about 2 minutes. You finish some KYC documentation and give us some demographic information like your address. Within a day's time, you will get either approved or put into our waiting list. We have 250,000 customers who are now a Slice member and 500,000 customers who are on the waiting list, which we keep.
You're going to hit 1 million, that means, in the next few months. Amazing. 200,000 already with another 5 lakhs in waiting.
Yeah, and we keep recruiting the people in the waiting list over every 6 months period or so. And we have been around for quite some time, Anupam, now. We launched our card, like I said, last year, and that is when we started exploding in terms of customer demand, and customers started coming. We're growing at about 20% month on month till March when COVID hit. And now we're again starting to, grow at the same pace. So it's very simple, as simple as that for a customer, and once they get the card, they can start using it on all the 5 million merchants in India that accept it. Basically, every relevant merchant for you, and pay back next month without any extra charges. If the customer wants, they can convert the transaction into an EMI, which tells you upfront about how much you are going to pay extra. Sometimes you don't have to pay anything extra. Also, we have some partners like Amazon, Flipkart, Make My Trip, where you don't have to pay anything extra for converting into EMIs up to a certain tenure.
Okay, Rajan, that's quite impressive. Just to clarify this, the risk part. So, how do you really solve the credit score gap? Because you're giving someone a credit card who probably doesn't have a credit score. So, how do you solve that? What do you do to address that?
Sure, we have multiple segments which we are addressing in this age group. There are first jobbers, second jobbers, freelancers, and students. So we have different processes for everyone. Where the customers already have a credit score, we rely on the bureau score and we rely on other information like the demographic data. Where the customers do not have a credit score, it's our responsibility to make sure that they end up building the credit score through us. And initially, to get on board, get them on board, we need to rely on alternative data points. But after they get onboarded, within 6 months' time, most of our customers have a credit score of over 700, which is a great thing for them because that puts them ahead of the peer. So these alternative data points that we look for usually are the transaction information of the customer. How much are they spending every month? What is their cash flow going to be like over the next 12 months period or so? What is the social network like? We have seen that our risk improves almost 3.7 times with the right social network that the customer is coming with, because that helps us in detecting fraud and intention related attributes of a customer. And then what are the demographic information? Which locality are they staying in? Which job are they doing? Which age group are they falling in? And that these three things largely help us a lot in determining the initial evaluation of the customer. Of course, what we also do is in these cases, we assign a smaller limit to customer so that they can get into that habit of paying back on time every month before they have a larger limit which they do not understand how to manage. And we keep educating the customer about the credit score and the importance of that so that there's a positive reward when the customer builds their credit score and pays on time. We also have incentives for customer for paying on time. We give them a cool scratch card, which is a gamified way of giving them some rewards, and they can get anywhere up to the whole amount that they have repaid back to us in the reward. Many of our customers win that every month, and they are super happy about that feature. And this is how we evaluate the risk of the customer and also make sure that they become good credit score customers as per the bureau, and then have a good financial life for themselves in future.
Fantastic. Now tell me more about this, okay? Because I want to understand the specific features that help your users to make better financial decisions. I like that stuff about how you essentially give some kind of a sticker or some kind of a nudge, some kind of a reward when someone pays the entire credit card bill at one time. It kind of, obviously when you use an app to pay your credit card bill, the one thing that comes up is credit. But, so I'm just trying to see if there are any similarities out here. But other than that, what specific features are there, that actually help your users to make better financial decisions? Because I know that whenever I pay my credit card for whichever credit card I have, if I pay it online, I don't get any, hats off or whatever from the bank for paying the credit card bill in full. So tell us about that. What specific features help our users, your users, to make better financial decisions?
Yeah, I mean, it goes from very fundamental features like transparency, where as a young customer, many times you're confused. What is the minimum due amount? And you may end up paying that minimum due amount without realizing that that's going to charge you a hefty interest. And that is happening because of your ignorance or because of not being communicated transparently of what will happen. And we don't have that. Either you pay back the whole amount at the end of the month, or you are converting it into an EMI where you can see upfront if you're going to pay anything extra or not, and if yes, how much and how many months you are supposed to pay back. So there's no confusion with the customer. It's very transparent. We have a very simple onboarding process for the customer. It doesn't take uh, 7-10 days for the customer to get onboarded and get the card. It's much faster than that. And there's a sense of community as youngsters. We want to spend our money and time as youngsters with companies that have a sense of purpose, like Nike and Apple and Tesla. And that is missing. Like I said, if you go to that website, it's not telling you that I believe in you and I'll back you. It's telling you that you can get a housing loan at so and so percentage, which is not making me believe that you have a sense of purpose. And I want to spend my time with a community that believes in that. So those kind of content, and when customers is receiving our emails, they get a sense of that community. Apart from that, there are regular improvements, enhancements in the whole transaction flow of customer that we have done, which our customers find very cool. Very small things like you can note down where you're doing transactions. So you went out with your friends, four of you. You ended up spending maybe $1,000 in a restaurant, and now at the end of the month, you will probably want to split this transaction with your friends. But at the time of the transaction, you paid that 1,000 rupees. So you can note down that there were three more friends with me at this transaction. And at the end of the month, when you're looking at your statement, you remember that this is where I paid the money, and I need to get the money back from my friends. So small things like those, you can track your location of your transaction, which helps you understand this 120 rupee, which you're not able to understand, where you actually spent, at some XYZ Private Limited, you immediately recognize with the location, oh, it was this juice shop. So these are kind of features really delight our customers and make them understand the statement very well. These makes them understand that transparency, that belief that we have in them, and that is why they like this experience over anything else.
Fantastic. And folks, like I said, the app is Slice. You can check it out on the Google and Android, the Apple Play stores. Last question, Rajan. So since you don't charge anything from your customers, how exactly does your business model work? Because you've gone on record to say that you're already profitable, and that's fantastic. So how does that work?
There are three parts to our business. One is the acquisition, which is where the payments happen, and customers don't have to pay anything extra if they pay back next month. Second is the monetization, where we have things like credit, and in future we will have investment and insurance and other things. And then third is the loyalty and community through which we drive retention. So as the pay later product with the Visa card that we have, we touch across all these three components, and that's why it's an interesting product to launch. Launch the whole proposition of what we are doing at Slice instead of launching just a deposit account or something like that, because we touch all these three elements. So it's not like we don't have monetization coming directly from the customers, but while we also charge the customers for some transactions where they convert the bill into EMI, or they want to take a direct personal loan into their bank account. We also have merchant commissions as a big part of the proposition, because we are directly interacting with the merchant, and there are 8-10 transactions per customer per month happening on the merchant. So we get a fee from the merchant. We have some other partnerships like no-cost EMIs, where we get higher subvention commission from the merchant. And then we have these interest charges that we have for customers when they convert into EMI, and service fees through which we monetize on the customer, which is the second part of the business. So because of this, our business works in a very traditional manner to a regular banking function, where they provide a pay later product, and we monetize on that customer with these set of ways.
Fantastic. Folks, that is a wrap on this show. The Slice Special, the credit card for millennials, the young special. My guest, Rajan Bajaj, founder and CEO of Slice. Rajan, thank you so much for doing this for our listeners.
Thank you, Anupam. Thanks again for having me here. It's great that you were able to keep the show short, which is how the millennials and Gen Z like it.
Sure, I hope so. Folks, listeners, if you like this podcast, don't forget to check out other interesting podcasts on the IVM network. You can listen to us on the IVM Podcast app or ivmpodcast.com. You can also follow us on our social media. We are IVM Podcast on Twitter and Instagram. If you want to reach me, I am B50 and Twitter. And thank you so much for listening to Paisa Vaisa.
No material on the show should be considered as financial advice. The material on the show is for informational purposes only. Please consult a financial advisor before taking any investment decision.
I hope you enjoyed that show. I'd like to thank our sponsors this week, Intel, for supporting us. Great week on the network. If you haven't been listening, why haven't you been listening? You should be listening. Rohan Joshi was on Uncle Please Sit, discussed the toxicity of the Indian pop culture. Really fun conversation to listen to. Rajiv Samant, the founder of Sula Wines, was on Cyrus Says. Again, I think that was a fun conversation. Also want to call out the season finale of Yuddha. Yuddha is our military history podcast. Definitely do check that out. It's a really great listen. And finally, I want to just remind you all that, it's a dark time, but if you need a smile, go check out the Smile India podcast by Shifa Mehta. It's in both English and Hindi, and I think that you will really enjoy the kinds of things that she's talking about there. And with that, I hope to see you again next week.
Do you wish you were smarter? Well, so do we. But the next best thing?
We could make you sound smarter.
And to help you with this endeavor, we are Simplified, a podcast that attempts to break down the complex world around you with a little knowledge, a lot of poor jokes, and a ton of random trivia.
Episodes out every Monday.
On the IVM Podcast app or wherever you get your podcasts.
See ya! Advertising is dead. Yep, you heard me right. Advertising is dead. We're all in the content business now. Let's not call it news, TV, radio, etc., etc. It's all content, and we're in the middle of this weirdly exciting phase where all the borders and lines that have been drawn over decades has been swept away by this lovely thing called the internet. We're a show where we don't dwell on just the stuff that is now, but rather the wider stuff about advertising, media, content, and the whole goddamn circus surrounding it. Tune in every Tuesday for our weekly unboxing of the mystery box we used to call advertising. I'm Varun Dugirala, co-founder and content chief at The Glitch, and this is my new podcast, Advertising is Dead.